Let me have this hard conversation with you, the conversation that most others are not willing to have. If you think about this, most people try to just sell the dream. They say, just follow me, you're going to double your money every few months, you're going to become rich, you will drive the Lambos in the not so distant future. But really, when you think about this deeply, if you're making money in the markets, if you return more than the rest of the market, then to a degree, you have to be better than the average market participant consistently. So you shouldn't just have luck. There should be some kind of component outside of luck that then justifies long-term above average returns. Now, why not talk about above average returns and not just returns in general? It's because if you've got a very long time horizon and you just set and forget, and you do this, say, with property, or you do this, say, with the stock market, over the years, if you just wait a few decades, you will make money. Your US dollar number will go up over time. But that's not necessarily because you gain that much purchasing power. That's just because the US dollar devalues over time. When you look at USM2, right, the US money supply, that goes up by roughly 6.8% per annum. So that's your expected return with stocks, at least in terms of price return, right? If the economy itself is somewhat stable, you will get 6.8% just because the monetary base devalues over time. You do get some dividends as well, right? The dividend yield on the S&P 500 is currently roughly 1.2% per annum, but that's even lower than the inflation rate. So really it doesn't matter that much, especially if you then also include fees that you might have, taxes that you might have. So really it's a devaluation of the dollar that's the vast majority of the gains if your time horizon is long enough. So achieving that, right, just getting protected from the monetary debasement, that's not really hard if you have a long time horizon. But beating the market, getting more than the 6.8% actually is extremely hard. So if you go the route of active speculation, of trying to attempt to generate more than 6.8% per annum, what you're actually doing is you are indirectly taking money out of the system. You need to have somebody else on the other side in the market that's actually losing at the rate that you're outperforming. Everybody gains the 6.8% because the money devalues, but everybody that gains more than that has to take it from someone. And if you want to do this long term, if you want to make more money than the average long term, then you need to have a source of that long-term return. You need to have a market edge. Now, if we are realistic about this, we know plenty of people that have a market edge over us. So there's actually a negative expected return in active speculation. That's why so many people lose money trying to actively trade. For example, there's the market makers and there's the exchanges. They take a cut, right? They take fees. Whenever you pay a fee, that money is gone. That money is gone to a business that always pulls out money out of the system. You've also got insiders, varying degrees of insiders that, of course, do have to beat the market as well. If you buy a token of a project, how many people are more informed about that project than you are? Those people tend to have a positive expected value over you. Those people have an edge over you. So the team members that are developing the project, that know everything second by second, they of course know more about the token's future than you do. They probably can time the ups and downs of the tokens a bit better than you do. They know the announcement ahead of time. And yes, in crypto, there's not necessarily that much enforcement regarding insider trading. So that edge is very, very strong, right? The insiders can pull out a lot of capital, more potentially compared to the stock market. Now, besides the team members, there's also the friends of the team members, right? They might also have friends that tell, hey, you know what? There's going to be this announcement, buy this token today, sell it in 2 weeks. You're very likely going to make money. So those people have an edge over you as well. Then there's the investors, right? The investors are also very much close to the team. Let's say the venture capitalists, etc., right? The venture capitalists have a strong connection with the team. They have regular meetings with the team, and the team has an incentive to also deliver a positive return to those investors to get future investments as well. So the venture capitalists have an edge over the average market participant as well. Now imagine you do this crypto speculation thing just on the side, right? You've got your full-time job, you don't need to have a track record, you don't really know how much you might outperform the market, so you still have your regular income and you spend maybe 1 or 2 hours per day on crypto. Again, then you will have other people that already do this full-time that have an edge over you. They can follow more news. They can follow more details. They can react to things quicker. They can be in the Discord channels of all the projects that they are following. They can react to changes quicker. And again, the more people have an edge over you, the harder it is for you to make money in this market. We have to be realistic about this. Our personal edge has to be big enough to justify outperformance. And since other people already have an edge over us, we are starting off with negative expected return with every single trade that we make. Now, here's one way how we can generate outperformance, and that's also my personal way. It's trying to build skills. It's trying to figure out things to react to market developments in a way that's potentially automated that most people don't have the skills to do. So for example, we can develop a bot that's automatically trading, right? That's maybe scanning all the tweets. Let's say when Elon Musk tweets about Dogecoin, then automatically, whenever that tweet is released, we automatically buy that Dogecoin. There's a high likelihood that when Elon Musk tweets about something, that the price of it will go up. Or let's say we want to go the more analytical approach, a more long-term approach. We can learn how to build dashboards with on-chain analytics. We can learn how to use Dune analytics to figure out where are the transactions going, who's currently buying, who's selling, what are the potential insiders, what are they doing, what are the whales, what are they doing? Is retail actually buying, or is the price rally just happening because maybe the insiders or maybe a few lever traders push the price up? What's the source of a rally? All of that kind of understanding is not obvious to the vast majority of market participants, but it is achievable for the people that are willing to take the time to learn the skills. We can go another step, right? We can potentially build arbitrage bots that maybe trade the price differences across different chains. Or that maybe trade the differences in terms of funding rates across different perpetual futures exchanges. There's all kinds of potential ways to gain an edge. We can also scan the mempool, right? It gets very technical, but we could scan the mempool, so the not yet completed transactions, but the transactions that might get on the blockchain. We could see, are there potentially whales that want to sell, that maybe created an approval transaction in order to sell their tokens? Are there large selling transactions potentially pending? And can we then automatically bet on falling prices ourselves before that trade hits the market? So this is very short term, and the shorter the time frame, the more edge we in general need, because that also means there's more competition and there's more trading fees. If you've got a very long time horizon, then again, it's just a monetary debasement that bails us out. So really, you have to ask yourself, for how long have you been in crypto already? Do you have an edge over the people that have been here for 10 years? Do you have an edge over the crypto veterans? Probably not. Do you have an edge over the insiders of a project? Probably not. Do you have an edge over the programmers that are very competitive, that know every latest development in the blockchain ecospace? Probably not. Are you closer to the random retail person, the millions of people that just watch YouTube videos and hope to get this hidden gem secret that then makes another 10 or 100x return? Are you potentially more driven by the luck that you had in the past, that then after a while got back to the expected value and you're hoping to replicate that luck? Or are you actually building on your skill? Are you actually trying to find a source of an edge in the market that helps to beat the market long term? Because in a way, the crypto market is still the softer market, right? There are less professional hedge funds, there are less quants, the liquidity tends to be lower, so it's not really worth for Citadel to get super much involved. And relative to the professionalism, there is a lot of retail. The number of retail investors is currently not growing, but still, the ratio of retail investors versus professional investors is still comparatively good for crypto compared to other markets, right? Compared to, say, the stock market or even the currency market, right? The bigger a market is and the more fungible the assets are, right? We can exchange $1 for another one, but we can't necessarily say exchange a big stock for a smaller stock. So if we've got a very fungible market with very monotonous assets and a market that has a lot of liquidity as well, we tend to have more professionalism, and we tend to also have more professionalism. The more mature a market is, the longer it has been around. So crypto hasn't been around for that long, comparatively speaking, and it does have a lot of small niche markets, right? A lot of small little altcoins that have their idiosyncratic movements. And that's why we can still develop an edge in crypto, and why it's much harder to develop that edge, say, in the stock market or even in the currency market. But softer does not necessarily mean soft. So it's still not easy to beat the market. It's not enough to just be above average. We have to be, say, in the top 10 or top 5%. I don't know the exact number, but the vast majority of people tend to lose. So if you're just slightly above average, you're still going to lose. Returns are very much concentrated. There are a few people that are able to outperform quite consistently, but the vast majority of people tends to lose to that minority that makes the vast majority of profit. So really, the target has to be among the top 5 to 10%, not just to be among the top 40%, to be slightly better than average. That's not enough to beat the market. We've got all those other people that have an edge against us, right? We just talked about this a moment ago. Now, personally, my alpha, my monthly alpha, my outperformance of a buying and holding Bitcoin over the last 4 to 5 years was roughly 1.9% per month. So that's it. Only 1.9% extra per month over buying and holding Bitcoin. Now, this might be worth it to you if your net worth is high enough. If you're only investing, say, a few $1,000s, maybe that's not even worth your time. And I'm not saying that I'm the best trader in the world, but at least I can relatively confidently say that I'm a profitable trader. I did make money quite consistently with rather conservative risk management over those years. So what 1.9% per month translates to is just a doubling in terms of Bitcoin every 3 years. So I have to wait 3 years to double, and we're not making a 10x every year or a 100x every year. And even the people that have been able to achieve a 10x during a cycle, very often they're losing 99% of their capital subsequently in the bear market. They simply took on too much risk, and they might not even have had that much edge in the market. It might have been just gambling. Because really, there are two components to this game. There is a luck component and there is an expected value component. There's a skill component. If you go to the casino, then of course you can win at the roulette table if you just play for a short period of time. But long term, the casino does have an edge, right? Long term, the casino wins, I don't know, in 51, 52% of the cases. So if you play for long enough, then the random volatility will cancel out and the expected value will shine through. The higher the sample size, the closer we get to the expected value. If you just play short term, we might have luck, we might have no luck. If we play long term, we actually see how high our skill is. The reason why there's a luck component in crypto as well is because we can't anticipate what individual market participants do, right? So let's say we trade based on retail investors buying a certain coin, right? The number of retail investors is going up. If there is a single whale that decides to take profit to then potentially dump the price by 10, 20%, and we just bought a moment before that, suddenly we are in losses despite the overall trend being in our favor. So we can make trades that have positive expected value, but where then we still can land on red, even though we bet, say, on black. Now, this video is not a discouragement to completely forget about speculation. It's just about refocusing what we should actually do. What we actually need to do is we have every day the task to improve our edge, to learn more than the average market participant, to be better than the average market participant. There are many ways to roam. There are many ways to beat the market. We could, for example, just create our own project and then be our own insider. Or we could try to become a networker and make a lot of social connections. And then, because we've got so many friends in the ecosystem, we have better, quicker knowledge than most others. We can also go the analytical route, right? That's what I personally do. That's just in my nature. I like to use numbers. I like to look at structures. I like to recognize patterns. But it's not the only way, right? If you do not like to program, if you do not like this analytical things, then you can also use your social skills. But then you have to do this actively, right? You have to go to the conferences, you have to make friends, you have to become buddies with many, many people, and then potentially monetize that. 6.8% per annum is very easy to achieve. Everything beyond that, all the alpha, that's pure competition. That's player versus player. That's the person that has the insight that gets long-term the capital from the people that don't have the insight, that instead just have the hope. It's all about insight. Insight and knowledge and skills equals outperformance. And of course, the basics are very easy to learn. For example, here on YouTube, there's all kinds of tutorials. But really, if you want to dive deeper, the best is to always learn from the people that are already beating. So that's kind of the shortcut for any learning, right? You learn from the people that are already successful at the game. You can do this by just following me, right? You could, for example, watch all the tutorial videos here in Premium. You could also learn this from other people that are better at other skills, right? If it's in your nature to do networking, maybe you try to figure out how you might be connected via one or two different ways to somebody that runs a VC fund in crypto. Short-term performance is luck and it's random. Long-term performance is not luck and it's all based on the edge you've got in the market. Do you have more edge over others compared to the people that have an edge over you? If the answer is yes, you're very likely going to make money if you play the game for long enough. If the answer is no, then the people that have an edge over you are going to extract capital from you. If you enjoyed this real talk, if you got something out of this, then feel free to give the video a like. It will help the channel grow. Thanks again for watching. See you next time on YouTube or potentially even see you on Premium. Cheers!